Nicole, Senior NLP Engineer at Aveni Labs. Welcome to episode 4 of our FinLLM series, where we'll be taking a look through the financial services problem space and asking the fundamental question, what makes financial services so different when it comes to AI? You might have noticed that while generative AI has exploded across sectors, from marketing to legal to consumer support, its adoption in financial services has been more cautious, more scrutinized, and frankly more complex. We're going to explore why that is and what it means for building responsible AI in this space. Financial services is one of the most heavily regulated industries in the world. That's not just a barrier to innovation, it's a reflection of the critical role this sector plays in people's lives. Whether it's pensions, mortgages, investments, insurance, or debt advice, these are life-altering financial decisions. And with that comes the obligation to protect consumers, to ensure fair treatment, and to maintain trust in the system. This has a direct impact on how AI can and should be applied. There are 3 foundational constraints that any AI model operating in financial services must respect. First one is data privacy. Client data is highly sensitive. You're dealing with personal identifiable information, or PII, financial history, sometimes even health or vulnerability indicators. And that data must be handled with strict safeguards, zero exposure to public models, and full GDPR compliance. That leads us on to compliance. Outputs from AI can't be mostly correct. They must align with regulations like Consumer Duty in the UK, MiFID II, SMCR, and more. That includes how advice is presented, what disclosures are made, and how decisions are documented. And finally, auditability. Every action and recommendation needs to be traceable. Firms need to be able to say why this was generated, what inputs were used, and who is accountable. That audit trail must be clear, defensible, and crucially retained. None of this is optional. It's the baseline. And AI used in this space has to be designed for it from day one. Beyond regulation, there's a broader conversation about ethics. Financial services firms are held to high ethical standards because they're custodians of people's futures. There's an implicit social contract. Your advisor, your bank, your insurer must act in your best interest. The introduction of AI shouldn't undermine that trust. And this is where explainability comes in. If an LLM makes a recommendation or a decision, the firm needs to be able to explain it, not just for compliance, but for the client. The model told me so isn't good enough when someone is planning their retirement or deciding on life insurance. Ethical AI in financial services means more than just not causing harm. It means being transparent, accountable, and fair. It means ensuring that AI enhances human judgment rather than just replacing or obscuring it. So what does it actually mean to train an LLM for financial services? It's not just about throwing a few documents into a retrieval engine or fine-tuning with generic financial articles. True domain training involves 3 pillars. Number 1, context. Financial services isn't just about terminology. It's about intention. A recommendation is very different from a summary. A suitable product isn't just one that fits, it's one that meets regulatory suitability tests. The model needs to understand those distinctions deeply. Specialist documents. This includes things like fact finds, policy documents, advisor-client transcripts, fund summaries, regulatory guidelines, and even more. These aren't just part of the internet. They're structured, formal, and specific, and training a model on them requires careful data engineering. Trust requirements. Outputs need to be not just accurate, but trustworthy, and that means the model has to generate outputs that a compliance officer would sign off, that an advisor could use confidently, and that a customer could rely on with confidence. This is the level of quality required in financial services, and it's very different from building a general purpose chatbot. Now the challenge is, regulators are still figuring this out too. There's no global consensus yet on how to regulate AI in financial services, but there are strong signals, especially from the EU AI Act, which the UK is already using as a reference point. The Act sets out a framework for high-risk AI systems, of which financial advice, credit scoring, and insurance pricing are all examples. These systems will need to meet strict standards for transparency, robustness, human oversight, and risk management. The UK's own regulators, like the FCA and the Bank of England, have echoed many of these principles in recent publications, calling for safe, responsible, and well-governed AI across the sector. The direction of travel is clear: higher standards, clearer accountability, and stronger oversight. At Aveni Labs, we're not waiting for regulation to catch up. We're building FinLLM to set the bar for responsible AI in financial services. That means designing FinLLM with domain alignment from day one, ensuring data privacy with strict isolation for public models and as much control over training data as is possible, providing transparency with explainable outputs, source citations, and audit logs, and embedding governance so that the outputs can be reviewed, scored, and monitored by compliance and operations teams. We're also investing in evaluation tooling, so firms can benchmark performance against accuracy, bias, hallucination, risk, and regulatory fit. And as we move into the next phase of AI, from generative to agentic systems that can act, not just suggest, the scrutiny on base models like FinLLM will only grow. In that future, general models won't meet the standards required for autonomous AI activity in financial services. Whether it's executing a fund switch, initiating a client comms workflow, or flagging risk alerts, firms will need models that are purpose-built, permissioned, and provable. We see FinLLM as a foundation for that future. So to sum up, financial services is different. It's not just another vertical for AI to disrupt. It's a highly regulated, deeply ethical, and fundamentally trust-based industry. Building AI for financial services means respecting that reality, not ignoring it. At Aveni, we're proud to be setting the standard for FinLLM, helping firms innovate responsibly and shaping the future of AI in financial services. Thanks for listening, and stay tuned for the next episode where we'll explore FinLLM's core capabilities and how it's outclassing frontier models where it counts.